Well, Colombian bonds are where all the action is on the international bond market. For the past 4 months, the Colombian Central Bank has raised interest rates, and that is prompting investors who buy riskier assets to invest in Colombia. Investors have seen gains of nearly 10% since March. Michelle Begue has the details from Bogota.
Restaurant owners know a thing or two about inflation. When the economy is going well, people like to eat out. More and more Colombians are living la vida bonita, or the good life, as Colombian restaurateur Julian Gustav Roche can tell you.
El dinero que fluye, ¿no? Entonces,
there is money flowing and money to spend. And when there is a little more money to spend, you immediately begin to spend on other habits, like going out to eat. That isn't a basic need, but more entertainment.
Free spending Colombians have helped fuel runaway inflation that averaged nearly 15% a year from 1955 to 2014. In recent years, Colombia tamed inflation. It dropped below 2% in the last half of 2013. But the latest survey from Colombia's central bank shows analysts forecasting the inflation rate approaching 3.2% by the end of this year. The central bank hiked interest rates to put the brakes on that. Banco de la República raised its benchmark lending rate 0.25 point to 4%, its third rate hike in 3 months.
The argument of the central bank is that the economy is at a good place, and from their perspective it is better to lift interest rates because it reduces inflation pressures.
The higher rates have proven irresistible to foreign investors in fixed assets, who've been flocking to Colombian bonds.
For example, United States bonds yield about 0.5%, less than 1% per year. And when you have a country that offers a yield of 7% annually, obviously for international capital, it is very favorable to bring money to Colombia.
In fact, Colombia may be offering government bond investors the best returns in the world right now, especially for those doing a form of arbitrage called carry trade. This is where investors buy riskier, higher-yielding assets with money borrowed from nations with lower lending rates. This investment strategy generated near double-digit returns in just 3 months. The big 3 rating services, Standard & Poor's, Moody's, and Fitch, all rate Colombian government bonds investment grade with either stable or positive outlook, meaning if there's any rating change in the medium term, Colombian bonds will go up, making investing in this country's bonds relatively safe as well as lucrative. Michelle Begue, CCTV, Bogota, Colombia.